All right, let's talk about Oracle because their latest earnings report just sent a massive shockwave through the market. I mean, on the surface, the numbers looked like a bit of a miss, but the stock, it absolutely exploded. So, what on earth did Wall Street see that most people missed? We're going to decode it right now.
Okay, let's just start with the number that tells the whole story 27%. That's how much Oracle's stock rocketed up in after hours trading right after the announcement. For a company this big, a move like that is just, it's seismic. And it creates this really fascinating puzzle. Because here's the thing, if you were just scanning the headlines, you'd be totally confused. Oracle actually came in a little light on both their revenue and their earnings. So the big question is, what did investors see that made them completely ignore those headline figures? What was the real story?
Well, the answer is pretty simple. The market made a choice. It decided to completely ignore the rearview mirror. A few cents here, a couple million there. Instead, everyone jammed their foot on the gas and looked straight ahead at the future that Oracle is painting. And that future, well, it's all about AI. So, let's get into it. Let's talk about the numbers that really mattered on this call. We're going to break down exactly what metrics caused this massive re-rating of the stock, and why Wall Street is suddenly looking at Oracle not as some old-school software company, but as a full-blown AI behemoth. Okay, to understand this whole story, you really only need to know one acronym, RPO. It stands for Remaining Performance Obligation, and it was, without a doubt, the single most important number they reported. The easiest way to think about RPO is just as the company's total backlog. It's all the future business they've already signed contracts for but haven't collected the money on yet. It is the clearest signal of future growth you can get. And that brings us to the jaw-dropping number itself. Oracle's RPO now sits at $455 billion. And no, that is not a typo. $455 billion. This is the number that just stopped everyone cold. It signals a level of demand and visibility into future revenue that is just almost unheard of. And to put that number into perspective, let's look at the growth. That $455 billion backlog, that's a 359% increase from just 1 year ago. I mean, a jump like that is it's staggering for a company of this scale. It completely rewrites the story on Oracle's growth from here on out. So where is all this demand coming from? Well, it's all about the cloud. The real engine room here is Oracle Cloud Infrastructure, or OCI. That segment grew an incredible 55% year over year. That is the hypergrowth engine that's basically pulling the entire company forward. And just to really hammer this point home, here are those headline numbers that the market just completely shrugged off. A 1-cent miss on earnings and about a $70 million miss on revenue. I mean, when you put that up against a $455 billion backlog, you can see why investors basically said, who cares? Okay, so we've covered the what, the big numbers. Now let's get into the how. How exactly is Oracle planning to capture this absolute tsunami of AI demand? Well, management laid out a very clear, very aggressive plan for building the fundamental infrastructure for this new AI economy. And the whole strategy really boils down to these 3 key pillars. First, they're spending big. We're talking a whopping $35 billion in capital expenditures this year just to build data centers. Second, they're not trying to beat the other clouds, they're joining them, putting OCI right inside their competitors' data centers. And third, and this is crucial, they're leaning into their biggest strength, the database. Now this right here is the real linchpin of their strategy. The Oracle AI database is designed to be the safe bridge between a company's most sensitive private data and the power of models like ChatGPT. It lets companies ask critical questions of their own data, but, and this is the key part, without ever letting that private data leave their own secure environment. It's all about secure AI inferencing. And this quote from Larry Ellison on the call, it just perfectly sums up their entire long-term vision. Right now, everyone's obsessed with the massive computer power needed for AI training. But Oracle is betting that the much bigger prize is AI inferencing, the day-to-day work of actually using these models to run a business. And they think they're set up perfectly to win that market. And management didn't just talk a big game. They put hard numbers on it. They are guiding for OCI revenue to hit $18 billion this year. That's 77% growth. And from there, they've laid out this incredible roadmap to becoming a $144 billion business by fiscal 30. It is a bold, audacious forecast, and it's exactly what investors are now pricing into the stock. So, with all the numbers and the strategy on the table, what does this all mean for the stock from here? Well, that brings us to our final segment, the next call. This is our analyst-style take on what to expect. All right, so our rating on Oracle after this quarter is clear. Outperform. The story here has fundamentally changed, and thanks to that massive backlog, the financial path to get there is suddenly much, much clearer, and frankly, de-risked. So here's the whole trade idea in a nutshell. Our thesis is that Oracle has pulled off a major narrative shift, going from a legacy company to a top-tier AI growth story, and their future is now backed by that huge backlog. The catalysts to watch for are simple. Can they hit that 77% OCI growth target? And can they build out their data centers fast enough? Now, the risks, they're very real. I mean, trying to spend $35 billion in a year is a huge execution challenge. Supply chains are still tricky, and the competition is, of course, incredibly fierce. But for now, the market has spoken, and it's decided that the potential reward here far outweighs those risks. The question for next quarter is pretty straightforward. Can Oracle execute? Can they build and deliver at the speed their order book now demands? Because in this AI race, the future shows up a lot faster than you think. This is not financial advice.